Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on positioning against high inflation rate and depreciating naira. The unrelenting rise in the inflation rate and the depreciating naira has continued to be a pain in the neck in recent time, especially for investors who are rightly positioned. The continued emphasis on this is to encourage you to take action, if you have not, to optimize your savings and investments while preserving your capital. Interestingly, the interest rates on fixed income investments have improved significantly in recent times, providing an opportunity to earn a higher return on your investment. Last week, the National Bureau of Statistics (NBS) published Nigeria's January 2024 Consumer Price Index (CPI), which showed that the headline inflation rate rose to 29.9% year-on-year from 28.92% in December 2023. This is the highest inflation rate since mid-1996. The year-on-year data measures price changes between January 2024 and the corresponding month, January 2023. The rise in headline inflation can be attributed to increases in both the core and food sub-indices. Some of the significant factors are discussed below. A. Food inflation rose to 35.41% year-on-year in January 2024 from 33.93% in December 2023, driven by a sharp increase of 3.21% month-on-month inflation in January 2024 versus December 2023. This can be attributed to higher food transportation costs, which is the transport price sub-index rose 25.9% year-on-year, the second highest among the sub-indices, due to higher petrol and diesel costs year-on-year. For instance, average PMS 226% year-on-year to 672 naira per litre, automotive gas oil 38% year-on-year to 1,127 naira per litre, and kerosene 21% year-on-year to 4,530 naira per litre as of December 2023. Also, imported food inflation rose 26.3% year-on-year due to the depreciation of the naira at the Nigerian Foreign Exchange Market (NFM) and the parallel market year-on-year. Also, the insecurity problems, which is banditry, kidnapping, and farmer-herder conflict in the food-producing areas, are also impacting negatively on farming activities. B. Core inflation, which excludes farm produce and energy prices, rose 23.6% year-on-year in January 2024 from 23.1% in the prior month. This can be attributed to the significant depreciation of the naira year-on-year, increased import and production costs, posing additional challenges for businesses. For instance, the naira has depreciated further by 40% year to date to 1,498.25 naira per dollar at the NFM window and 26% year to date to 1,620 naira per dollar at the parallel market. Moving on to the FX market, the pressure on the naira has persisted despite the numerous CBN policies in recent times. This has translated into improved dollar supply that could help stabilize the naira/USD exchange rate. The long-term solution to increasing our FX flow is to expand our exports, especially value-added products beyond crude oil, while short-term fixes include reducing crude oil theft, attracting FPIs, securing FX loans, and well as attracting remittances to the official channel. How does high inflation affect you, and what should you do? If you kept 1 million naira in your savings accounts without investing in the last year, the savings would be worth 701,009 naira 41 kobo in real terms today, signifying a loss of purchasing power of 298,990 naira 59 kobo. Basically, the 1 million naira is worth 701,009 naira and 41 kobo in terms of goods and services it can buy compared to a year ago. However, if you have invested in a fixed income instrument, even at 15% per annum, the loss in purchasing power will be reduced by 150,000 naira. The focus should be on how to reduce the impact of inflation on your savings by never leaving your money idle, even if the potential return will not completely compensate you for high inflation. You can invest in fixed income instruments like treasury bills, which is now around return of 20% per annum, federal government savings bond, an average of 13% per annum, federal government bonds, average of 16% per annum for medium to long-term bonds, and commercial paper, over 20% return. How does a depreciating naira affect you, and what should you do? In addition to inflation, the depreciation of the naira reduces increases the worth of your savings in naira terms. In periods of instability like now, depreciation erodes the purchasing power of local currency faster than inflation. However, over the long term, the impact would roughly be the same because inflation tends to determine depreciation. With the persistent decline in the value of naira, it's advisable to have a significant portion of your investments in dollars. You can invest in a fixed income dollar fund or mutual funds to add value to your dollar savings rather than leaving the funds in your domiciliary bank account. The potential interest rate varies between 3% and 7%. Investors with moderate to high risk tolerance can consider foreign stocks with solid fundamentals and exchange traded funds ETFs with a long-term focus. Kindly listen to our podcast on investing in dollar-denominated assets to understand the investment process and opportunities. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.